Good morning, everyone. Today is 18th Feb 2026. Let's start with the analysis for the day. Sell side liquidity. Weekly sell side liquidity right here at 24,154. $149.75, so we'll go yeah. Right here. So what are we watching right here? This was previous week's low, week low. What we have is previous week's high. Okay, let's start with the daily high and daily low. So this was yesterday's low. This was yesterday's high. So what does daily bias tells us? Price does go down, but it does not breach, or it does not close below previous day's low. It happened here. It happened like after this day. Price went down, sweep liquidity below the previous day low, and it closed above that previous day low. So I guess before the market goes down, it might want to sweep up the liquidity somewhere. We have one of this as fair value gap, but we have this as fair value gap, but it did not do any kind of market structure. So I'm waiting. I'm not going to mark that. Okay, so let's start writing down in the journal what are we observing right now. So today is February 18, 2026, 7:23 a.m. and daily is bearish pause and no closing below previous day low. Let's move on to 4-hour time frame. Let's move on to 4-hour time frame. What can we see here? Price went below previous week low and was instantly rejected with a strong buying. Okay, so this was on Monday. So on a 4-hour time frame, what we can see is how is price reacting. Price came down. There was a good fast reaction on the upside, and since then it consolidated and it broke down. Now I was saying this thing about yesterday or on Friday, what happens is, like, see how there is this consolidation box right up here. There's a consolidation. So this is called as accumulation, and if I'm not wrong, then see how the price is getting accumulated. It broke down below. It broke down below into a 4-hour fair value gap. It did breach below this 4-hour fair value gap. It did go down below that 4-hour fair value gap. But this is accumulation. This could be manipulation, and now it could distribute high towards previous week's high. So we can keep that thing in mind. As of now, what are we watching on 4-hour time frame? Yeah, price went up, came down, made a lower high, and then went down straight with all the red candles. All the red candles were taken out, and almost one green candle. What does this shows? There's strength in bulls, or there's strength in buying right here. But what I can see is there is no fair value gap. There is no fair value gap other than just this one. Four-hour fair value gap, which was already tested, but this was 4-hour bear fair value gap, which is now taken into bull inverse fair value gap. But not clean structure here, so I would neglect that part right now. What are we watching? 4-hour unclear, but still in range bound. Unclear direction. If I am biased, slightly bullish bias. Let's move on to a 15-minute time frame. Let's see if we can find something up here. Okay, 15 minutes shows that it is good in uptrend structure. Good uptrend structure. Now there was this London high. Yeah, we might have missed the trade. 721. Okay, see now this equal lows, relative equal lows, or even if I started from here, these are relevant equal lows. So this becomes sell side liquidity. Then we have this level. We move down, we have London low, we have Asia session low, which is relative equal lows around here. That becomes a good level of liquidity. So all these becomes level of liquidity. Now obviously there are lows below this. I'm just marking till here. This was okay. So let's move to 15-minute time frame. What is it doing? It consolidated, broke above, and instantly got rejected. What we can say is it took out London high, is going below. So 15 minutes, you can say London high taken, London low is still open, Asia high has been taken, low is still open. And price gave sharp rejection above London high. Okay, let's see if we have any news. Let's see if we have any news today. February 18. We have US durable goods and US industrial production. US durable goods at 8:30 and US industrial production month on month at 9:15. We also have FOMC meeting minutes today. So the news is FOMC at 2 p.m. Industrial at 9:15 a.m. Price is sharply moving down, but yeah, generally the price should be moving like London low should be a good draw on liquidity. We can also see this as accumulation, manipulation up high, and distribution towards this low. If I'm bull bias right now, what I'll be looking for is a structure shift or good inverse fair value gaps, like all these fair value gaps right here. If these gets inversed, this one we have fair value gap here. If all those one of them gets inverse with strong kind of V-shaped recovery, then we might be looking for longs targeting these highs. Because see, even after it took out buy side liquidity, which is London high, London session high, it kind of created equal highs right up here. This becomes a drawn liquidity. How is gold doing? Gold is still chopping. Yeah, gold is still chopping. We have durable goods. Durable goods at 8:30 a.m. 1 minute time frame shows it's good clean moves. Clean moves, and we can trade. We can trade today. Not that choppy. We will be able to get fine setups. Now this fair value gap has been inversed. There's still no liquidity sweep down here. There was one and one this one sweep, but not here. So there's this. We can either trade, we can take this bull inverse fair value gap, or at any point if this bull fair value gap gets inversed into a bear fair value gap, then we will be taking the short entry for London low. But as of now, this bull side trade is active. Why have I kept the target this high? Because see, there are a lot of fair value gaps here, but there is no clean structure. Like there is no swing highs here in here. So if the price starts going up, then it will continue to move up until it takes out any swing high. Yep, there are chances that it could reject from any one of the fair value gap as well. Let's see what ES is doing. See the difference in here? See the difference in here? So this is called as, I think, this is called as a SMT on different contracts. This one is ES, this one is NQ. London high was not swept on ES, whereas it was swept on NQ. So this becomes a good divergence for us to take the market short or long. Why am I preferring this? Why am I marking this long entry? It's simple. Price is in bullish structure on 15-minute time frame. Hence, on a 15-minute time frame, where is the liquidity? It's right at 24,887, which is here, which was scrapped. And there's also one equal lows here on a 1-minute time frame at 24,854. Both of them were taken. We have seen an inverse fair value gap, and that is the reason why we are going long. And what we can say here is the buyers have been stopped out here, and now the sellers would be in. Now where would sellers put their stop loss? Right above this high. So if this trade works out, it can go all the way till 962. Given we have news at 8:30, which is US durable goods, and we have industrial, there's something related to industrial, US industrial production at 9:15. Yeah, so it's something like that. We're just going to, if you feel that the price is strongly bullish, then we are just looking for a internal liquidity sweep, generally on a 15-minute time frame or 1-minute time frame. And if we can see any fair value gap inversion, or if we can see any structure shift, that gives us a good confirmation that price can start moving up higher. Also, there was one of this breaker block right here, bull breaker block right up here. So now if the price is clearly bullish, then what it will do, it will sweep down this right candle's low and could start moving up higher. If the price is good, heavy bullish or like bullish. So generally when the trend reverses, it gives like one chance right here. It will try to make the price go down. That fails. Once we get this low, once we get this as low, price will try to test it again. If we find the buyers below this low, then the price is bullish. We're not getting much reactions from bulls under this low. Generally, what I've seen is if it takes down this low, gives us fast reaction up, that will be a good indication for us to enter longs again, putting the stop loss below the lows that it creates here. Okay, now these lows have been taken. I'm just taking this out. See, this candle would have been an entry, but I was a little bit hesitant because of this fair value gap. Now, if this fair value gap, bearish fair value gap, get inversed, we can look for an entry. But the stop loss now becomes wider, 9-10 points wider. If anybody entered here, you should be putting your stop losses to break even if it takes out this high, or else the stop loss is just below this low. Now, just 5 points of stop loss. Target would be 92 points up higher. Now this becomes a bullish inverse fair value gap. Yep. happening on a 15-minute time frame? It's too slow. So this is one of this is here. It was one by fair value gap. The second fair value gap, both of them were inverse. There was another by fair value gap right here that was inverse. This is also has been filled up. Even that this one is getting inverse. This is a good good sign. Good signs for price to go up higher. But there's one thing that I'm also noticing is that even after this fair value gaps getting inversed, the price is not moving higher. That is one of the concern. We might we might see volatility at 8, which is in 2 minutes. It could just so this swing low has been defended. The swing low has been defended. Now let's see. Yeah, the high has been taken, so the stop loss should be at break even now. Stop loss should be at break even now, and I would expect the price to continue to move up higher. Well, see, there is another point right up here that the price has consolidated. What it can do is manipulate and come down, but we're just watching the move. We are not going to take a loss in this trade. Yeah, we're not going to take a loss in this trade now.
Tomorrow feels like sunlight spilling through the blinds. I don't know if I'll reach it, maybe I won't mind. I keep returning, tracing steps I left behind, as if the past could teach me what I'd like to find. The morning moves in colors.
Stops at break even.
I try to hold the moments, learning more and more. The lightest touch from you is all I can afford.
Stops at break even. We're not going to risk anything up here. The price is still moving in our favor. We're not going to risk anything up here. Yes, the price on a 30-second time frame it shows bullishness, still holding the structure, but it is continuously getting pushed downside.
And all this time, I wonder, am I getting closer to you? Getting closer to you. After all this time,
What's happening on a 5-minute time frame, 15-minute time frame is green doji, it's still confused.
tomorrow feels like sunlight warmer than before. I don't know where I'm going, but I'm wanting more. I keep returning, though I've left some things behind. And maybe now I'm closer to what I left to find.
So here would be the breaker block, so this should be acting as support. If it doesn't,
What I left to find. What I left to find.
Yeah, the price action is too choppy. The price is not coming down, the price is not going up. It's going to be a good, strong, strong downside reaction. Okay, stops triggered, break even. Another bearish fair value gap right up here. Another fair value gap got inversed. I'm reading it. Yeah, the price is too choppy. Price is just messing around. I don't know, it is waiting for something. Yeah, it's FMCD. It could be choppy. Maybe we might be able to find volatility at opening of the market, and then it can still start chopping. We're not able to find any continuation. Okay, another small trade. Every bearish fair value gap is getting inversed, but this is not a good market to trade in. Yeah, we can we can look into fading this fair value gaps, but one of them might continue and you might incur a big loss. So this is not a good market to trade in right now. It's still choppy. Let's go watch gold. Let's do the gold analysis. Let's start with the weekly time frame. Let's take out every drawing. Weekly is bullish pause. Let's go to a daily time frame. One green, one red. This is previous day low. We have same thing as previous day high. Previous day high here. 4-hour time frame. What does it say? 4-hour time frame is following bearish structure. It still did not take out the liquidity. It still did not take out the liquidity. Oh, it's way too low. Right now, what can we see? It took out this low, consolidated, is moving up higher. Where can it find its first resistance? Is around here. This is a bearish order block. Might be able to find some of the selling here. There's no fair value gaps, nothing. There's inversion right up here. Let's move to a 15-minute time frame. It's strongly bullish. Took out Asia session high, London session high. Took out London session low. It's moving higher with strong price. Yeah, another day. We still have to wait for market to open, or at 8:30 if the price can start moving higher. just just continuously read the structure. It's not about big. Yeah, the bigger the structure, like 15-minute structure, bull fair value gap, bull breaker block, and all these things, if it is on a bigger structure, and see how it got supported right here, there's a bigger block on a 15-minute time frame. It gave us a good point of 52 points. Good 52 points. Even if we would have entered here at this, you're still up 20 points against the risk of 27 points. This gives you a good target, and it's not that it will not go up, it could not go up, it can still go up. So these are the things, like this is a breaker block, there was a fair value gap right up here, and the fair value gap got triggered, right? Take out this breaker block and see how the fair value got triggered, and you saw a good move up. You just have to keep reading the chart. There should be a draw on liquidity. Another prices prices chopping a lot. Could be accumulation here. Could so what I am so what I am interested in is see how this is somewhat equal lows. This becomes a good liquidity draw on liquidity. Good. Oh, take down this low, or if the price takes down this low and gives us a good inversion, then we might be looking for longs for a 100 points target. There's one thing that I would say, there's one thing that helped me get profitable is that you have to understand that what you see, what you analyze, you might analyze it correctly and market can still prove you wrong. Like if I would have seen this structure, this is a good structure now, it was also taking support and it should be heading up higher. If I would have entered long here, and if I would still hold the position saying that the market could reverse at any point of time, it can also go down at any point of time. So why was I not profitable? Because I would just stick into this long trade for long and still hold the position in loss, and it could still go against me. I would still keep holding that I was right. So this thing hurts accounts. this thing hurts your account, it will give you a big blow into that account, and then you will, and to make up for that big blow, you will start trading with heavy quantity, and on a heavy quantity you might, even small loss is going to be, even smaller tick size, you'll still could incur big loss. So that that mental that mental or that mindset is basically why a new trader does not get profitable for a longer period of time. As soon as he realizes that that big blow that big blow we have to avoid that big blow. And how do you avoid the big blow? You can always avoid the big blow is uh, by getting out of the market with the risk that you have defined, instead of saying that, proving that you're right. So that mindset is what keeps new traders unprofitable. I used to do this a lot. But now what I have accepted is that market can go against me at any point of time. Market can go against me at any point of time. Doesn't really matter how good or how clean a setup is. I can, if the market is coming down, there's a breaker block, there's a fair value gap, there's inversion, and it could still fail. So what I have to make sure is that even if the setup feels like A++, or the accuracy of that setup is like 90%, I would still risk small onto that. Until my account grows up to a good size, and still I would never risk a large chunk of my profits as well on this kind of setups I know where I know if I lose that, I'll be losing major amount of my profits. I would not do that. Instead, what I would do is I would risk some of my profits. What I would do is risk some of my profits. If it works, that's extra money, that extra profit that I could gather. But if it doesn't work, then I'm not losing much more, and it should not affect my mindset. So position sizing has improved. Position sizing has impacted a lot once you uh, like these trades. I used to get into like 3 4 5 NQ, which is like 50 MNQ, right? So even even if there's 5 NQ, 1 point is equal to $100. So if it goes like five points against me, it's like $500. Now that $500 is going to be mentally it's going to impact me, and now I would book that $500 loss. I would also book $500 profit, but there will be certain condition like here. See, if I would have accumulated profits here, but then on this fair value gap, if I would still keep holding, I would have lost about 2,000 on this one, right? On a 5 NQ contract. So this is the thing that has helped me a lot, is keeping the position size so small that even if you lose, it does not impact you on the next trade. So this is the most important part of why keeping the position sizing small, keeping the position size small. I'm just going to write it down in my journal just to keep reminding myself that size small enough, keeping the position size small enough to ensure that profit and loss does not impact your next trade. Now, there was a time when with the heavy contracts, I was making about like 1000, 1500, sometimes 2000 in one trade. So that would give me a feeling of happiness, and that's why I will always go with that 5 contracts, right? I'll always go with that 5 contracts with heavy position sizing. I can be lucky, like I can read this market and I can be lucky once, but as I said, this is market. It can turn against you at any point of time. Even if the setup is A++, it can still fail. So what has helped me become a profitable trader is keeping the position size small enough so that neither profit neither loss impacts my ability to see the next trade. Watching the PNL has always been watching the PNL during the trade is one of the wrong way to trade. If if you are able to see this setup, if you're able to see the setup and execute that, like if you have seen the inversion right up here, right? If you would have just entered here with the stop loss here for the target up higher, with all your analysis right now, it has been about 47 minutes. So your ability to hold this trade for 47 minutes without having greed of the profit or without having fear of loss, that is what will make you profitable on a longer run, because your risk is just 23 points against which you are targeting for 94 points. So your risk reward is almost 1:4. So if you're able to find this kind of trades and you're going to execute this kind of trades on a longer run, this will mathematically be more profitable to you. But you should have the ability to hold this trade. You should have the ability to find this trade, hold this trade all the way till your target. Okay, so this is an important piece. See how I was reading this, right? The sell side liquidity can be grabbed. It was taken. Now what happened was, watch what happened. There was another fair value gap inversion. There was another bear fair value gap which was inversed into a bull fair value gap. Even if you would have entered here or here, see this. You have to understand, sometimes it's better to wait for the inversion here, and sometimes it's better to wait for just get entered here, depending on the market condition. What am I watching right now? Highs are continuously being tested, lows are not tested that much. If we are not able to find buyers to take the price higher, then we might be heading lower. I've heard these kind of terms in terms during when I watch Top Step TV. These they tell us that if they're not able to find the buyers up high, the price can go down lower to find buyers, and if they find buyers at a lower price, then we can see the push up higher. Right now the price came down. There might be no sellers up here at this level, so the price can still go up higher to find the sellers. And if there are still heavy sellers sitting around here, that will act as a ceiling and the price can come down again. But that's a difference. That's a different type of trading method. That's a different type of trading method. you just have to keep finding the liquidity levels. Where is the liquidity equal high? This is still a equal. So this fair value gap, inversion fair value gap, it's still a liquidity level. It has equal lows here. On a bigger time frame, still heading up higher. On a bigger time frame, what we have noticed is it has taken the internal liquidity on a 15-minute time frame, and now it should be heading towards internal liquidity on high, right? So as I told you, your ability to hold this kind of trade is what is going to make you profitable on a longer run. So now you're already 1:2. Yeah, more than 1:2. But your ability to hold this trade, to have that amount of trust in this trade, is what will make you profitable. You have to get experience enough what you're watching. Yeah, I got out at break even, but that's based on my method of trading. So not all the times it will get me out at break even. It will also save me a lot of time from losses, where if I would have achieved my first initial target and I would have kept scaled out 50% here and take out, and remaining quantity would be at break even, that would help me avoid a lot of losses. Because this job, it happened today, it might not happen every single day. It will give me targets in one go. Sometimes it happens that you might not even get this retest. It will just continue moving higher. It might be in one candle, it can be chopped like this. As long as your draw on liquidity is good, what you analyzed, and if you can find the structure against that, put your stop loss in, protect your stop loss under some good lows or highs, and then just watch the trade play it out by itself. I think we should be able to be profitable there. See what I was saying? The price is continuously moving up higher, testing highs. It's not testing lows. Kind of too choppy right now. Price is just going high, coming down, coming back again, so on and so on. Another pre-market session where it is not trading as expected. Let the price play it out by itself. So what can we see here? price accumulating, manipulation high. It might be coming down for the manipulation, like distribution downside. What have we seen here? We have one of the bearish fair value gap, which was we have one of the bull fair value gap, which was inverse, and now this is a good one. There's also another fair value gap, bear fair value gap. This is a good indication of the price heading down, but the risk to reward here is not that great, because the risk is 31 points against which the target is just 22 points if we take the first target. So this kind of trade, if we can avoid this kind of trade, that's great. We will find multiple opportunities throughout the day. It is not necessary that you just take the trades which you see right now. There are always trades which will be aligned with your setup, which will be aligned with your risk to reward with perfect execution. Yeah. So as a job of a trader is just to wait for that kind of setup. And there it is, target for that active AMD model. Accumulation, manipulation, distribution. There it is. It can still continue to move lower. There it is. This breaker block has been tested once. I don't want to. We still have London session low at 24,801. We have Asia session low at 24,709. It's CPI day. There it is. I get it. Okay, breaker block 15-minute. If this inverses, but will prevailing up. If this gets inversed, then we might have a trade on gold. So this goes to 1 minute time frame. Let's see this. Oh, okay, it had the same setup here. Accumulation, manipulation, and distribution. Generally, as there's this 11 points of risk. Fixed. But if this fair value gap gets inverse, then the target would be 49.26 downside. This ES doing is doing the same thing, taking down lows. Price is not moving the way I'm expecting it to be, but what? Since last 13 minutes, the price is still ranging. Neither moving up, neither moving down. Today's FOMC meeting minutes at 2 p.m. And generally on the days of FOMC meeting minutes, it moves like this. Market opens in 26 minutes. We might be able to see some volatility at the first 15 minutes and hopefully it continues. We are not trading in the first 15 minutes.
likes your skin. Your scent draws me in. Hope you'll leave some behind whenever you go. Your hand seeks my hand. No, you'll leave me a mess, but I hope for the best. Don't know what you want.
The price action is too choppy. It's not moving at all. Another day, another last 23 minutes, it's still doing the same thing. Not moving higher, not moving lower. To chop it.
Soft light falls on quiet sand. You almost leaned in. Shadows move, skin to skin. Something unspoken. Will you let me in? You and I will always have that one night. Come morning light, we'll always have that sunrise.
Market opens in 13 minutes. Price is still chopping, it's not moving up, it's not going down. What about gold? Yes, I'm sorry. Okay, there is this inversion, bearish fair value gap inversion. Yeah, this 15-minute fair value gap has not been inversed yet. There's no trade up there. London low has been taken on ES. It's not taken on NQ, which means the price could still be heading down. Okay, let's take the 4-hour time frame. See, previous day high has been swapped. Previous day high has been swapped. Might be hitting lower. If it goes down to 450, it would be great move downside, but I don't. Okay. As we have seen, there is this bearish fair value gap which was inversed. There's this full inverse fair value gap. See how this gap is acting as support. Now the price has started moving a little bit. No good price action. No good trades available today as of yet. It's 9:29. Market opens in market opens in 15 seconds. So at the market open, what are we watching? We're watching that the price is in 4-hour bullish fair value inverse fair value gap. It has taken liquidity below, but the displacement is on the downside. The price is still moving lower. Okay, we're not going to trade this manipulation. Okay, bearish fair value gap is working out good. It has taken the liquidity. London session low has been taken out. Still have Asia session low open at 24,709. We're not trading this first 15 minutes. There's a lot of manipulation going on. 9 more minutes. We'll be eligible to trade after that.
tide. Let the water go where it wants to go. You can run and hide. You can bury yourself beneath the stones. Somebody told me don't pretend, 'cause everyone could use a friend sometimes. Take some good advice. Don't let your fear decide. That's how you break inside. You don't need to worry. Somebody's waiting down the line to pick up the pieces. Hey, you'll be alright. I can feel the sun and how the wind makes way across the fields. Let me take a breath. Let me be a part of something real. Someone said it's better when you hold on to a helping hand. Sometimes we could all use a friend. Don't let your fear decide. That's how you break inside. You don't need to worry. Somebody's waiting down the line to pick up the pieces. Hey, you'll be alright. You'll be alright. Waiting down the line.
Eventually,
So don't let your fear decide.
today it will be all about AMD accumulation, manipulation, and distribution. If the price action is choppy, see how it is chopping right here. So this generally becomes AMD trade: accumulation, manipulation, and distribution. Just give me one moment. Same thing goes up here. See how there was this consolidation box right up here. See how the price was accumulating right up here, broke down below, manipulation, now it's moving up higher. So today is choppy day, so it might be all about AMD models today. Keep looking for AMD models until the price starts moving cleanly. Same thing happened up here. See, there's this accumulation, long accumulation, round tool, accumulation, price is just ranging, then it broke above, manipulated, and then it came down. See, this was all about accumulation and manipulation. Hmm. There's still no inversion that I've seen here. There's still no inversion I've seen here on a 1 minute time frame. But if we move on to a 30-second time frame, what we noticed was there was this small inversion that occurred up here. There was this very small inversion. Will inverse for value gap, and generally I would be waiting for price to close around here, but because this 30-second time frame candle closed a lot higher, 30-second candle closed a lot higher, 48 points, I waited for the price to come down to this inversion again and putting the stop loss below the low, 29 points. And because of that AMD model that I was showing here, this accumulation, manipulation and distribution, I was just watching this consolidation box right up here. I entered here with the risk of 29 points and exited here. One partial exit was right up here at this high, this high, at the high of this candle, and the second exit was around here. Second exit was around actually here. This was a good trade, 1:2.5 trade. It's pretty choppy. So if the price wants to continue up higher, what we would be looking for is below this low. We find the buyers below this low, and if we can see a green candle, we can target up higher. So this is not a good price action as there is no fair value gaps coming in today. It's too choppy. Price is just ranging. It might move for 1 minute and then start chopping again for a couple of minutes. Not a good day to trade. I've already scalped one entry here as I showed, 1:2.5. I scalped about 78 points, which should be good. Okay, with this one trade, we're done for the day. With this one trade, we are done for the day. As you can see, there is no proper price action moving on today. There's always another day for trading. All you need to do is like wait for you do not want to go into deep trade on the day when the price is not moving cleanly and you're not finding setup. You're not getting the setup. Even if you find the setup. So I think it's a good day for us to end the stream here. We'll be back again tomorrow with the same kind of analysis, same kind of trade entry method, trade exit methods, with the liquidity draw, with all the ICT concepts. If you guys do not understand any concept that I'm talking about or I'm using while trading, you can let me know and I can give you examples during the live market. Thank you for watching the stream. See you guys tomorrow. Have a good trading day. Do not overtrade. Make sure You live to see another day. Make sure your account is safe. Yes, go ahead. Look at this parallel gap inversion. If we are really bullish, then we should be delivering the price higher from here. Generally, your entry should be here with the stop loss below the low, and your target should be at least 1:2. At least 1:2. Yeah, which is above this consolidation box and above the London session, like the high above this London session. Yeah. Make sure you put your trade to break even after it takes out this high. Okay, let me just do 1 second. Next, break even, or just type in BE. Middle, center, triangle, wide. Break even right here. Yeah. How can someone find different ways to use every day? Is there any way to unlearn that? How can find different ways to lose every day? Find different ways to lose every day? Well, if someone can find different ways to lose every day, they should start journaling. They should start journaling what mistakes they are making and create a plan. Have one method of entry and exit. Instead of focusing on different ways of losing, try to find one way of losing and flip that to winning side. So we should be putting our stop losses at break even right here. There is no need to risk. The target is still up there higher. We're still moving forward. Towards our target. It's already okay. Let's just take this out. We're already up 51 points. There's no reason for us to lose here. It's still moving higher. It should be moving higher, taking out this liquidity high. The reason I told this morning, see how there are equal highs up here. This becomes a good liquidity target. Price is moving in your favor. It's open 66 points. 66 points is not a small amount of points. One NQ would be like $1,200. So points are important. You should not be losing from here. Break even, partial exits, multiple partial exit. One is here, and the third one, last one is here. So yeah. Do you practice? What do you preach, or it's just feel good to give out big advice? I do practice. That's why I'm saying this. If I am not able to do what I say, then it's something different. If you might have noticed, since I've started streaming, I'm just using one kind of one kind of trading method. Some people use EMA, I'm using ICT concepts, and I'm just going according to that. There can be a lot of there can be a lot of different ways. We can use VWAP, Bollinger Bands, MACD, whatever. I'm just using one entry method, sticking to that thing, making sure that I'm not risking much. I'm making sure that I'm not risking much, because what we want to ensure is we want to make sure our account grows. If the risk is small and the reward is big, then your account will grow. This is a good trade. I did not enter into this trade. As I said, I'm already done. I'm already done for the day. 90% of the quantity should be out here. It's already moving good. 100 points moving good. There you go. 104, 107 points. 114 points is our target. Should be reaching easily. I'll still be out at 90% right here. The multiple opportunities, you will find multiple opportunities during the market session. On a day when you don't know, because of this choppy sessions, the price could chop. There's always another day. I can wait to do the same thing tomorrow when the price is moving good as it was moving yesterday. So it's okay. If you're able to see this kind of trades in live market, you can mark this kind of levels, mark this kind of entries and exits. It's all about execution. How good are ICT concepts? ICT concepts, I've seen that if you fully understand what it is, then I think it is pretty good, because it gives you precise entry and exit. It gives you reasons why to enter the market, what you are looking for, what levels you are watching for. If you if you just see this kind of chop, if you just trade the candlesticks, like there's this engulfing candle, if you just trade this kind of candlestick, you will find multiple entries, but you don't know where the price will be heading. Whereas ICT gives you proper clear direction of why the price should be moving higher, what are the levels it should be targeting, and so on. Like this inversion, as I said, the price was moving up higher. I just told you, as the price was coming down right here, if the price comes down below this low and finds buyer here, you will find good continuation towards higher side. And what are the entry methods? This inversion, bullish, this bear fair value gap, which was right here, it was inverse with good displacement. Now this becomes a good entry method. So there are contexts of where the price is, where it should be heading, based on, you can mark a daily time frame, 4-hour time frame, 15-minute time frame, and you just need to find entry method. You should know where the price is heading. Now, as I said, the price was moving in with good displacement higher side. So if the price is moving higher, you just want to see the buy side, sell side liquidities, which was resting here, and under London session low, and here you find reversal entries. Because the price is heading higher, you just want to look for buying opportunities. That's how you decide the bias. Now on a 1-minute time frame, did we get entry? Here, there we have one entry right here. We do not have any kind of fair value gaps right up here. So we do not have any kind of fair value gap which can be inversed, or any bull fair value gap which we can enter at. This is the only entry that we found out, and it has hit our target. So once you understand why I said that this is a good entry point, simple reason I said was good displacement up higher, but I did not find any entry points right here. Whereas when this bear fair value gap came in and it got inversed, now this inversion is a good good entry point. And there you go. Even if you entered, your drawdown would have been, even if you entered here, your drawdown would have been 15-16 points against your stop loss of 56 points. And it just ran through all the liquidity levels, break even, target 1, target 2, and so on. Even if you have a lot of knowledge, regarding trading, if you're using indicators, the main thing about trading is risk management. Once you start managing your risk properly, you will be able to make your account grow. Opportunities like now, you also have to wait for the opportunities. Once you start looking at this, once you have to start reading the price action. See, there were no fair value gaps, hence I did not enter at any point. When it gave me that clean entry point, I just marked this trade. Well, I do not trade after live stream. Once I've scalped enough for the day, that should be good. Because you can keep finding this kind of setups like during the whole trading day. Instead of going through the whole day, it's like if you watch cricket, then it's like a test match. You do not want to get tired hitting every ball. As long as your account has grown, you're managing your risk properly, right? I think that should be it. Market are here forever. You do not need to trade every single setup that you find. You just have to trade 1 or 2 setups, make decent money, and then should close for the day. I think that's a good way to make sure that you do not overtrade, and it is a good way to just keep continuously growing your account. Because the markets are moving right now, and it could all of a sudden start chopping. You can find multiple entries, but if it starts chopping, you'll start losing. Once you start losing the profits, you get into a psychological zone where you want to recover that profit back, and that generally turns into a big losing day. Hence, try to stick to couple of trades, no over trading. As soon as you've made profit, I think should be just closing for the day. Good for you. There are no entry points up here. Just keep marking all the fair value gaps. There are no entry points. Until and unless price shows bearishness like this, and bearishness fails, there is no entry for longs here. Price can continue to move 400-500 points without any bearishness. That doesn't matter. Your entry point is what it matters. $200 points, 194. Easy trade. This was a good trade, good setup, but the reason why we did not enter was FOMC, and it was chopping since a long period of time. Any more questions for the day? I think we have I think we should be good for the day. Price is still moving higher. Price can move higher, but it can also start chopping. It is in 4 hour bearish fair value gap, so make sure you do not keep going for long trades. Wait for the price to give you the perfect setup. As I said, market is here forever with the same kind of concept. There's always another opportunity tomorrow. Okay, see you guys tomorrow. Do not risk do not risk much. If you have not entered into this trade, just leave it. Look for another opportunity. Always focus on next trade, not on this one. And just because it gives you this bearish fair value gap, like bearish inverse fair value gap, doesn't mean you have to short the market. You have to have a draw on liquidity. Will it work out? It could. Will it work? Depends on the market. Okay, see you guys tomorrow. Have a good day.